NCC is extending the cuts. Will be interesting to see what happens on that stock. That's down about 2.5%. And of course, one of the most volatile stocks has been PC Jewelers in the F&O market. So that's also very volatile right now. But yes, ITC looks like there could be some bit of short covering move on that. A couple of other interesting stocks. Of course, Tata Motors is down about 1.5%. But looking at on the gaining side, you have ONGC, which is up about 1%. ICICI Bank as well is gaining a bit in trade. So these are a few stocks to track.
And Asian Paints too, right? I mean, that stock from the lows, it had hit those lows of 1300 in May. In early May, it's already back to 1450 almost. So Asian Paints looking pretty good because of the fall that we've seen in crude. But the big story remains the macro disappointment. GDP has grown at just 5.8% in the last quarter, and FY19 growth has come in at only 6.8%. Here's a quick take from some of the economists that we spoke to.
Our estimates show that about 5% of GDP is eaten up by what we call non-merit subsidy, which have no business being there. So you need to cut back on those. You need to cut back on exemptions and so on of taxation, which add another 5%. So actually, with deep fiscal reforms, you could free up a lot of fiscal space to do some of these things you can't get away from without increasing the deficit. It's very urgent to do market reform of the agricultural market, especially the abolition of these, agricultural producers marketing cooperatives. Everybody's been talking about why the farmers get poor prices because of the cartels in these things, but nobody has had the political guts yet to really take them on. But with this strong mandate, here is a chance.
India's growth engine has basically been flying on one engine, right, which is consumption. And we're seeing both because of agrarian distress and because of urban incomes and therefore urban consumption slowing, that the consumption engine is getting exhausted. Now, if you combine that with the fact that the global environment is so much more vitiated, global growth is pegged to slow meaningfully, export should also be poised to slow. Now, that's the concern, that if two engines of growth, domestic consumption and exports, slow together, will you get stuck in some hysteresis? Growth has certainly slowed, but let's not get too alarmist because some of these are temporary factors which will reverse partially in the coming quarters.
We do think there is a case to really front load the easing. So we do expect 25 basis point rate cut in this policy review. Of course, monetary policy transmission is the more important issue. And we do believe that RBI will try to assure markets that liquidity will stay comfortable. We are not saying that liquidity stance should be changed to surplus, but RBI can at least front load the easing, liquidity easing over the next 4-5 months. So that they are not in a similar situation as last year, where they really had to, chase G6 in a big way in the second half of the fiscal year. We do expect, liquidity surplus to be, closer to 1% of NDTL very soon.
Okay, so that's the hope trade, as the economists are pointing out, that the RBI will cut and perhaps indicate that it will continue to do a lot of open market operations so that the economy is able to get more liquidity. A 50 basis was ruled out only because the first 50 itself has not been transferred, and they may want to wait for transmission. Mr. Tulsen, I wanted to complete that packaging argument you were making. A lot of those stocks are in the mid caps. What would you bet?
See, Lata, in fact, if you take a call on the Q4 numbers of the packaging film, I'll quickly go through maybe SRF, Polyplex, Cosmo Film. In fact, all of them have posted very good numbers, and with the raw material pricing falling, because HDP, LDP, these all polymers are the raw material for them. They pass on to the final user will not be cut to in that extent. That will definitely be the fall in the Brent, will definitely be the margin expansionary for all these packaging company. So yes, keep eyes on if you want to play on the little high beta component kind of stocks, maybe mid and small cap, one can look for Polyplex and Cosmo Film. As I said, that both the numbers were seen to be quite good. But if you want to really play safe, then even SRF can be looked into. But the chemical division segments may not perform as well as going forward because of the sales in the AC down, maybe after the June quarter. So it's a mix of a call to be taken. SRF is definitely seen efficient company, but seen expensive also. But the other companies like Polyplex and Cosmo Films in the packaging film business can definitely be looked into.
All right, Mr. Tulsen, thanks a lot for joining us. We'll talk to you in closing bell now and talk about some more stocks. For now, the pre-open has settled 30 points higher on the Nifty, 30 points higher on the Nifty Bank as well. So let's see, the mid caps actually opening, flat line. Maruti, of course, is the top loser on the index, down about 1.6%. BPCL up 2% and Asian Paints up about 2%. Let's take the 9-10 calls then as the pre-open settles. Ashwini, if we open here, is there an index trade? And what's the 9-10 call?
The index is tough to say because the futures are at a discount and you want to trade really the boundaries. So 11,850 and 12,050 are those two boundaries. You don't want to get in the way here, but I would think buying into an Indigo is sensible. This is a buy with a stop of 1660, target of 1710.
Okay, Indigo, of course, getting back to its highs. The last month correction was quickly gobbled up, and after that, you saw that big move. Sudarshan, for you, is there an index trade, or you're also focusing on stocks?
Well, the index trade is difficult, but the only trade I can sense is that if the Nifty doesn't go up and starts coming down, then a short trade towards the 11,850 target is possible. That's a big if it starts weakening. Godrej Consumer Products is a buying opportunity. I explained about it earlier also. It's a buy with a stop at 685 and a target of 696 for the day.
Okay, and Nitesh, what about you? What would the big call be at 9:10 this morning?
Yeah, I would choose a long trade on Adani Ports at a stop at 409 for targets of 432.
All right. Yeah.
Okay. Well, we still have a few minutes, so let's get you some more medium-term opinion. Shireen Bhan spoke to Manish Chokhani of Enam Holdings after the announcement of the portfolios. Let's listen to what he had to say.
NMDC, which makes iron ore. Now, because they are forced to sell iron ore at maybe a third of international prices, they decided rightfully for them that let me go and build a steel mill. So they've now put up 3 million tons of steel. The logical thing was they could have just been merged into Steel Authority of India. And it would have been efficient for both of them. And in theory, why does the government need to own Steel Authority or NMDC anymore today? 3.5% of our GDP is spent on interest. On a collection on revenue side is barely 10% of GDP. So 35% of the income this government makes goes away on interest. And that interest is 2 times the amount we are spending on capital expenditure, where the crying need of the hour is to do capital expenditure. You would imagine anyone prudently will start looking at how do I get my interest costs down. And when you then go beneath the surface, and therefore it's useful to have someone like Amit Shah who goes into the detail.
Okay, that's Manish Chokhani. So in all likelihood, we will start with a 30-point gain on the Nifty. But here's some opinion also coming in from Jonathan Garner of Morgan Stanley, his outlook for Asian markets and what he expects.
I do think that you're seeing, to coin a phrase, something of a conscious decoupling on both sides from the US and China at the moment. So as last month went on, it became more obvious to us that we're unlikely to see any kind of near-term resolution at the G20. Over the weekend, we had, of course, the news on Mexico and the additional complexity there, and that just re-emphasizes on a sector basis that we'd continue to avoid and be underweight autos and tech hardware, which are the two industries that are most caught up in this supply chain complexity. We've had a trade on since early last month of being bullish Brazil, India versus Korea, Taiwan. Again, Korea, Taiwan most open to trade, a lot of exposure to those sensitive sectors, whereas Brazil and India have several positive idiosyncratic drivers right now. In terms of the position we have, we're actually a small overweight Indonesia after the recent election result. And when we do the survey work of global multinationals, yes, Vietnam tends to top the list, but we're also seeing interest in relocation into Indonesia, India and Thailand, less so Malaysia and Philippines.
Okay. We just have a minute to go and let's get some more views. Actually, Nifty Bank is not the best performer today. It's obviously the oil and gas index that's doing the best. Sudarshan, what would your thought be on Maruti? I mean, it's a 1.6% fall. Is it showing that it is troughing out?
It is showing, but the news keeps on coming in and it's responding back to the news by moving down. So this is not a buying opportunity. We don't think the lows have been finalized yet. We just have to wait. It may be, but not yet.
Okay, I wanted your thoughts, Ashwini. By the way, I didn't get a chance to welcome you back. Welcome back on board. On Axis Bank, it's now at a new high, 800 rupees plus. Do you see more upsides here?
See, Axis Bank, basically all these corporate banks are still doing extremely well. So my sense is that at some point Axis Bank should hit 950, 1000, but buy towards, say 770, 780. So that way it's kind of, fully priced. But if you get a 50-100 point decline, then it's a fairly decent buy.
Okay. At the moment, PSU banks are doing better than private banks, other than the big ones, of course.